Welcome to MIBU Science and Business Studies Forum. This is the Business Studies section. We are starting with the subject accounting. Accounting is the identification, recording, processing, and communicating accounting information to organizations, users, and for various uses. That means that accounting information is used for various uses. Let's call it general uses reporting. Users of accounting information. Accounting is regarded as the life wire of business organization and is often called the language of businesses because accounting information system communicates data to help people make better decisions. Accounting information systems serve many kinds of users who can be divided into two groups: external users and internal users. External users. The external users of accounting information are those who are not directly involved in running the organization. They include shareholders, brokers, lenders, that is the creditors, customers, regulators, and lawyers, etc. Internal users. Internal users are those directly involved in managing and operating an organization. They use the information to help improve the efficiency and effectiveness of an organization. These internal users include the executive directors, production manager, marketing manager, sales manager, store manager, etc. Opportunities in accounting. There is wide opportunity for accountants both in public and private sector. Fundamentals of accounting. Accounting is guided by principles, standards, concepts, and assumptions. The general accepted principles. The general accepted accounting principles called GAAP. Accounting practice is governed by concepts, rules, and regulations known as generally accepted accounting principles GAAP. To use and interpret financial statements effectively, we need to understand these principles. The main purpose of GAAP is to make information in financial statements relevant, reliable, and comparable. When we say information in a financial statement is relevant, what we mean it has an ability to influence the decisions of the user. When we say the information in financial statements is reliable, which means it can be trusted by the user. And when we say information in financial statements is comparable or are comparable, means that you can compare and contrast between different organizations. Principles of accounting. Accounting principles are of two types: general principles and specific principles. The general principles stem from the long-use accounting principles. They are portrayed as the building blocks of GAAP. These are: the first one is objectivity principles. Means that accounting information is supported by independent, unbiased evidence. In cost principles, means that accounting information is based on actual cost, that is historical cost. Going concern principles means that accounting information reflects an assumption that the business will continue to operate instead of being closed down. That means the business is alive, it is operating, it will continue to operate. So we have not foreseen any incidents of closing down. Monetary unit principles means that we can express transactions and events in monetary value. That means we can value any transaction or events in terms of money terms. We can give it value. For example, we classify football players according to their values. This is monetary values. Revenue recognition principle. These principles provide guidance on when a company must recognize revenue. If revenue is recognized too early, a company will look profitable than it is. If revenue is recognized too late, a company will look less profitable than it is. The following three concepts are important in revenue recognition. 1. Revenue is recognized when earned. The earning is normally completed when services are being rendered or when a seller transfers ownership of the product to the buyer. Proceeds from selling products and services need not be in cash. A common non-cash proceed received by a seller is a customer's promise to pay at a future date called credit sales. 3. Revenue is measured by the cash received plus the cash value of any other item received. Business entity principles means that a business is accounted for separately from other businesses, entities, including its owner. That is, a business independent of anyone. It can sue and be sued legally. Then B. Specific principles. Specific principles are governed by legislatory authorities and non-governmental regulatory bodies such as CAMA, Company and Allied Matters Degree in Nigeria, Investment and Security Act 2007, Companies Regulatory 2012, non-governmental bodies like ANAN, ICANN, etc. Thank you very much.